Now, Angola is making headlines with reports of a bid for a majority stake in De Beers, a move that could reshape the diamond industry. But beyond diamonds, the country's economy is opening up and questions remain about where the best risk-adjusted returns lie and what role banks like Banco BAI play in financing Angola's ambitions, from resource projects to diversification and job creation. I spoke to the CEO of Banco BAI, Luis Lelis. We kicked off the interview by unpacking how the bank is allocating capital between retail growth, corporate lending and strategic sectors like mining and energy. Here's what he had to say.
Well, today we are allocating very close to 70% of our assets are in treasury bonds.
Okay.
And the remaining is divided in loan to corporates and individuals. Out of those, we divide between 60% and 40%, 40% for individuals and 60% for corporates. But now, due to regulatory requirements, we are aiming to really reduce the percentage of the allocation to treasury bonds. We must continue to diversify away our risk, the sovereign risk. And we have a steady, well-designed plan that by the year 2028 or 2029 at the most, we will reduce to about a half the percentage of the contribution to net interest margin from the treasury bills and bonds. And we are in a steadfast process of increasing our loan portfolio to corporates and individuals. Just this year, we have increased by about $100 million, 112, $120 million to individuals, in kwanzas, obviously, and for corporates, very close to $380 million equivalent, obviously, in kwanzas. And this is our effort to really diversify away this risk, the sovereign risk.
Yeah.
Our main objective is to really look at the national development of Angola and go into the sectors that the government is indicated as the priority sectors. Angola needs to diversify away from oil. Okay, this is a strategic priority. So we are going into agribusiness, the full chain of the agribusiness, from the culture of the products to the transformation. We're also going into the agro industry and the industry as a whole, but we will also go into the mining sector, okay? Because we feel that there are opportunities in there. Obviously, there are limitations on our balance sheet, and we will try to coordinate that also.
And let's talk about your exposure to the mining industry, particularly, you spoke about the National Development Plan where there's focus when it comes to mining and diversifying away from energy. There's been headlines around diamonds being a girl's best friend, and it looks like Angola's trying to jump on that. Maybe talk to me about your appetite when it comes to those projects, especially considering the diamond market right now, where there are risks when it comes to synthetic diamonds as well.
Well, I'm not an expert in diamonds. All I know is that diamonds are a girl's or a woman's best friend. And from what I've talked to people that are experts in that, and they say that synthetic diamonds are a risk, but your girl, if she goes to somebody that will assess the value, will assess whether it is a synthetic or a natural diamond. And if the person knows, and if she finds out that it is a synthetic, you're going to have a problem. No, but again, on a serious matter, we do believe that, and we have increased, just to give you an example, this year we have increased our exposure to the diamond sector by about $66 million just in this semester. Obviously, there are a lot of risks. Obviously, there is not only the risk of the synthetic diamonds, but also the market itself.
Yeah.
There has been a decrease in the price. There's a lot of tension.
Also sustainability issues.
Yes, sustainability issues. But we think that the diversification away from the diamond producing sector, it needs to be done gradually. And at the same time, we are imposing certain conditions to our clients, okay? Because obviously when you go and visit these explorations, you will see that the environment is suffering. But our clients are also looking at, I would say, the recovery of the areas, and at the same time looking at the social impact that their developments create when they start these operations. There is a lot of pressure to even reduce it, but we do think that it must be done gradually, as it is being, as in the energy sector. Africa still needs those important sectors, the energy and the mining sector, in order to really at least create the opportunities for development of the countries and creating jobs for the youth.
And you know, in a South African lens, there's been a whole lot of talk around doing away with coal, but there are ways to do it sustainably. There's, you know, technologies that we can implement to make sure that coal releases less emissions. So there are ways to work around it. And just piggybanking on that, you know, you talk about being considerate of the other issues at play, especially in this green economy we are trying to build, right? And that slow, gradual transformation. Here we are seeing Angola in headlines for bidding for the majority stake of De Beers, which is owned by Anglo-American. Are you behind a deal like that? Would you, you know, dip your fingers into a deal of that scale, considering what that business looks like at the moment?
Well, that is a tough question to answer because, you know, it's a decision that I'm not involved in.
Okay.
First. Second, as I mentioned to you, I truly believe that the extractive industries, obviously looking at all these factors of protecting the environment and the social impact, we must be also thinking about the sustainability. But at the same time, as the definition of sustainability states, you know, we must take into consideration the current needs, but also to protect the future needs. And today, what do we need? We are growing in Angola at almost 4%. It's 1 million new Angolans that are being born. We need to create in 2 years about 1 million jobs every year. The average population in Angola, well, about 55% of the population in Angola is below 25 years old. So there is a need to create jobs. But at the same time, our commitment with sustainability, with ESG, is to make sure that our clients have in place the proper mechanisms, the proper procedures that will also train their own employees and the community on how to protect the environment and the social aspects when they implement their business.
All right, maybe let's zoom out and focus on themes or challenges that are affecting African banks at the moment. We all know that access to capital has really been a challenge for many SMEs, businesses across the African continent. What do you think are the hurdles when it comes to these businesses accessing capital? Is it a risk factor here?
I think it's mostly trust.
Okay.
I've been in banking to very close to 25 years. And what I see is that there are certain cultural aspects that do not work with the formal model of analyzing credit. Okay? I think we must train our own people. I think we must explain to our potential lenders or people that were going to provide credit, that there are certain rules that must be applied in order for them to get the loans from the banks. And I see it in Angola. I've seen, I mean, today during this forum, this was also mentioned. So financial inclusion, but at the same time, financial literacy are key, is key. And then to be able also to bring certain cultural aspects and discuss in a very honest and open and transparent way that if you get a loan, you must repay. And it starts from the school, in my own view. So, and that is going to be a transformative process. As Africa grows to 1 billion inhabitants, the potential is there. So once we are able to really to overcome these issues, it's going to be, you know, a huge potential.
And picking up from what you just said, you spoke a lot around criterias when it comes to borrowing, when it comes to lending. And I tend to ask myself whether we've adopted frameworks, Western frameworks, that perhaps don't work for us.
I totally agree with you. It's not that they don't work. They eventually need to be implemented gradually, okay? Because those are frameworks that have a very robust, I would say, science behind them. But they are developed for a more developed countries. You know, countries that have already gone through the transition process. They are matured. They have matured. For us, my own view is that we need to be very careful, you know, say that we're going to implement, make the commitment that we're going to implement, but that needs to be aligned to each country's development program, okay? Because most of the countries in Africa are still in a stage that there are basic needs that need to be fulfilled. So I'm always very cautious when we import models, you know, we just copy-paste without the realization or the knowledge that there will be huge impact on the capabilities of the local banks to grant loans. So I'm always cautious, and I try to also talk about it with decision makers and say, let's be careful, let's look at our own development program, let's look at our maturity level, and that align. I mean, if we're going to implement, how long will it take? Why don't we implement in 10 years, 15 years? But once you make the commitment, you start working. And you cannot just implement overnight because it doesn't work. It creates a lot more challenges. And in our environments, when you bring challenges that you cannot explain, social unrest is even a bigger aspect because it brings also the political risk.
Yeah. And in that process of implementation, do you perhaps think we should have some sort of regional harmonization? There's been a lot of concerns around fragmentation, that there's no cohesion when it comes to the African continent and that everyone is operating in silos.
Yes, I mean, it's a good sense. No? It just makes sense if we are able to do that. But for me, it all starts with our own borders, okay? The free movement of goods and services, you know, the possibility of us traveling within our own countries, I mean in Africa, without really the demands for, huge demands for a visa.
Yeah.
You know, it's so easy for somebody to come from Europe, from America to our countries without a visa or get a visa at the airport. But when you try to fly to a neighboring country, you know, you have a huge checklist to provide information. So it goes back to trust. You know, we must try to identify, obviously cognizant of the situations that we do not or aspects that we do not have information about. Security of our borders. How do we allow for increasingly having more movements of goods and services? You know, because if it is easier for you to go, for example, to Europe, you're going to be spending the money in Europe. You know, when you could just go from South Africa to Angola and do tourism in Angola, and vice versa. And the same applies to other countries. So this is a process. Obviously, I do not have all the information that the governments have, but the more we discuss about this issue in an open and transparent way, the sooner we will find the solutions. Because if we have the free movement of goods and services, our savings are going to remain in Africa. Our spending is going to remain in Africa, and also we are going to be able to invest the disposable income in our neighboring countries. And from that moment on, we will not need to go and get financing outside. This is my own personal view.
That was CEO of Banco BAI, Luis Lelis.